what are some of the strategies that you would still recommend newbies to trade today? Because obviously we talked about earlier, some strategies change, some worked well in 2020 and 2021, and this year things have changed. What do you think is a beginner-friendly strategy that a lot of newbies should learn this year?
Yeah, so I mean, I love morning panic dip buys, but as we were talking before, like there just haven't been that many morning panic dip buys.
Yeah.
The best morning panic dip buys are on plays that have been running for 3, 4, 5, 6, 7 days in a row. Then they drop 30, 40% in a few minutes, taking out stop losses. Then ideally with the promotion, the promoters bounce it because they don't want an investigation, or dip buyers come in and you get like these 10, 20, 30% bounces in a few minutes. We're just not seeing that right now.
Yeah.
There have been a few this year, but not very many. Shorting first red days, that was always my go-to strategy, shorting. It still works, but I personally don't short because I trade like a newbie, and I don't think newbies should be shorting because a lot of the shorts right now, the squeezes are insane. Before, when I first started shorting, stocks would go 2 to 6, 3 to 9, 4 to like 12 over like 3 or 4 days max.
Yeah.
Now you're getting like 4 to 20, 3 to 80, like 5 to 100. And you're just like, newbies can't control themselves. So now I think like a teacher, so I wouldn't short first red days. Even though they're profitable, a lot of my top students have made a lot of money shorting the first red days. It still works. Newbies is difficult because you just can't control yourself. So right now, for newbies, I think that you should actually be buying short squeezes. I always say thank you, short sellers. Thank you to all the shorts who sacrifice their time, their health, their wealth, and they participate in these squeezes.
Right, okay.
It's partially my fault. This is what's crazy because I've been successful as a teacher and I have so many millionaire students who do short sell.
Yeah.
Now there's a whole bunch of wannabe short sellers. And there's a whole cottage industry. There's all these little brokers that have borrows on these shorts. And before, there were never really that many borrows. I had a music video called No Borrow, No Cry. Right?
I remember watching that on YouTube. Okay.
I just released the 13th anniversary updated edition, right? But now there's a lot of short shares out there. There's a lot of short sellers and the squeezes are just crazy. So as a newbie, you can sometimes buy these terrible companies, but they spike the fastest. Like the most fundamentally flawed companies can spike the most. And that's confusing for people because people are like, no, I want to buy a blue chip company. But no, you can buy like the worst company and it squeezes because of too many shorts.
I think it's very interesting because when I first found out about you, that's when I think you had some lessons on short selling, but back then it was so hard to get access to these, I think you call it like a high net worth broker, whatever. You need a certain amount of capital to be able to short. I didn't have that. So back then it was very difficult. And then when like things started opening back up for these like people with smaller accounts, I was able to short. And then it got so popular that nowadays there's maybe a little bit more edge going long, at least the first or the second green day, and then you short it after that.
It's crazy how patterns evolve. Like even going back to my 99 and 2000 strategy, buying the .coms or buying the OTC pumps and selling the next morning. At first I was buying at like 3:55 p.m., 3:50 p.m., selling the next morning 9:30, 9:35 a.m. And like, you know, you could have more time. Then it had to get earlier and earlier. So by the end of the strategy, I was actually buying it at like 3 p.m., not even holding overnight, selling at 3:45 p.m. because the pattern sped up. So you have to kind of understand, like if too many people partake in a strategy, it dissolves and it flips. And so like that's what's happening with short selling. So like a lot of short sellers hate me right now because I'm always tweeting at them. I'm like, thank you for your sacrifice. Like I know that you're going to the doctor a lot. Your stress levels are off the charts. You're having like heart palpitations. It's scary to be a short seller. Even like some of my top students, they make a lot of money. But like, you know, like HKD went crazy parabolic. I had students and non-students who lost 6, 7 figures on that.
Kyle was here yesterday and he did talk about his really painful HKD loss.
But he's up nearly $8 million or $5 million now. So it's like it's good and bad. If you're an experienced short seller, you can usually outlast the squeeze. Or you at least have enough know-how to cut your losses. Newbies keep averaging up. They think they can outlast it, but they can't. They don't have the know-how. They don't have the experience.
I think as a trader, whether you are more short bias or long bias, and whether that changes or not, I think it's good to know both sides.
100%.
Because you want to know, as a short, I want to know when the longs are selling and when the long setups are not working, and I want to go the other side. And same thing, vice versa.
I mean, I have 9,000 video lessons in my video lesson library. I've been a little busy. Like the first third of them is pretty much all short selling.
Okay.
And people are like, no, I don't want to watch that. You don't do that. But I'm like, no, it's good to know. First of all, it's good to study the past. It's good to study history, but it's good to know, like, thinking the other side too. But people don't want to do that. They just like, no, I don't want to study something from like 3 or 5 or 7 years ago. God forbid, it's 10 years ago. But the crazy thing is, like, the patterns don't change. That's why I bring up like 99 and 2000 with .coms, very similar to 2020 when companies were getting into the crypto space and they would like change their corporate name to something crypto and the stock would triple. And then 2021, 2022, companies would get into AI and chat GPT, same exact pattern. So it's like, no matter what the trend is, people are buying hype. And it usually ends the same. It's not an exact science, but there's a very similar pattern. Woo! NASDAQ down 2.5%. Let's go!
Right. So as we speak right now, you just checked your phone, the NASDAQ is down.
2.5%.
Why are you rooting for it? You're not even short.
So I haven't shorted a stock in like a year and a half or something.
Yeah.
But I want more volatility, okay? The bigger the market crash, the better the panic dip buys. We haven't been getting that many panic dip buys because we've been in such a bull market. Right? So like it's weird. Trading is very counterintuitive. I just want a lot of volatility. Right?
Yeah.
So if the market panics, like, were you trading in 2008 during the crash?
No.
So like a lot of people haven't been there from 2008 or like let alone 2000. If the market tanks, like, forget the NASDAQ's down 2.5% today. That's nice.
Yeah.
But I want like a 10% drop. If the NASDAQ drops 10%, small caps will drop 50, 60, 70%.
I see.
And then I'll get my morning panic dip buys. I got nothing but cash right now. I'm all liquid. I have 0 positions.
I see. Okay.
And I'm also betting on people. Like, I still like my little like friendly wagers side bets. I'm like, I bet there's going to be a crash. I was tweeting like, come on Black Monday, but then Bill Ackman screwed it up. I'm like, today I tweeted, I was like, Ackman, shut your trap up, let it crash, Black Thursday, Black Friday, let it begin.
Okay.
I just want volatility, and this is what traders should be more into. They're so obsessed with like their biases. They want like a bull market, they want like a nice backdrop. I just want volatility. I want patterns to open up.
Yeah.
That's me.
Yeah, I think especially in the bear market, the bounces are way bigger. Whether it's, I trade mostly large cap now, but like probably for penny stock, like bounces are a lot more aggressive as well.
I need a giant crash to open up like some 50, 60% panics. A lot of people aren't prepared, just like short sellers aren't prepared for the upside during these squeezes, longs aren't prepared for a crash. There's so few traders who have seen a crash in person in real time in 2008 or 2000. It's so like there's no bottom. Everything's just falling. And if you're long, like it's the scariest, it's like the worst feeling in the world. You're like, no, this can't happen. No. But it does.
So during that crash, did that affect your personal portfolio and like a trading account?
No, I mean, I always just try to look for patterns. Like I'm very opportunistic. I don't have like long-term holdings.
Oh, you don't even like... Oh, you don't invest?
I got nothing. I got money market funds. I'm earning like 5%.
What?
5.4%. I don't invest. I don't believe in necessarily like long-term investing for people with small accounts. You have to understand, I trade.
You don't have a small account anymore.
I trade with a small account.
Okay.
Understand, I'm so like you said, like, do I have people like working for me and helping me and stuff? I'm such like a micromanager. If I have like a long-term position, I'm still going to look at it. I can't just ignore it.
Okay.
Right? So like I know who I am. I have my CDs. I have some CDs. I just got a CD the other day, like 5.4%. Let's go. Right?
You can continue to learn from the Full Trader podcast over here. And if you're interested in joining a trading community with real traders and live mentorship, then check out the link in the description below the video.